does that mean to you? Would you mind defining woke? Because it's come up a couple times, and I just want to make sure we're on the same page.
I mean, woke is something that's very hard to define, and we've spent an entire chapter defining it. It's hard to explain in a 15-second soundbite.
Get some sleep. Good morning, money magnets and master traders. Looks like the SPY is gapping above the 50 daily moving average. So far, does not look like the bears are doing their job. Had some cool ticker symbols report earnings yesterday, and looks like it's helping out push SPY to the upside. That 50 daily moving average is going to be very important to look at for today, so make sure you guys have it turned on in your charts, guys. As far as how the trading went yesterday, in my opinion, it was amazing. There was some money to be made to the downside yesterday, but most of the money was made to the upside. It was incredible. Of course, Uncle Charters has a Discord where I try to alert the group and keep the group updated price action wise throughout the day so that we can trade on the right side. And I wrote here on the first post of the day for SPY, 547, 548.6 must clear to put 550 and 552 plus in play. If 545 fails, 543.2, 542 and 540 incoming. Okay, we look at the 15-minute chart. You can see here that SPY on the 9:30 candle, the first candle of the 15-minute chart for the trading hours, it broke down my 547 level right there. Okay, but Uncle Charters, I missed that one, but it's okay. When you miss one setup, you catch the next setup, and beautifully we were able to break down the next level at the 545 level. Let me turn that to yellow. Boom. Okay, the 545 level. Broke it down on the 15-minute chart. I wrote to the group, make volatility great again. 545 loss, put in 543.2 and 542 in play. Trust no bounce unless 545 and 547 can recapture. So once we lost 545, boom, puts hit 543.2 and hit 542. Beautiful for a nice level-to-level move. But what happened from there? Well, Uncle say, don't call a bottom, call out the false breakdown setup. When a loss level gets recaptured, we recaptured 543.2, but 543.2 wasn't really a critical level. For me, the critical level was at 545, that yellow line. The reason, if I zoom out just a little bit, you can see on a previous day, that 545 level right there, that yellow line, the bounce off of 545 led to a very nice bounce. Very nice bounce, a $10 bounce after hitting 545. Gave us a nice $10 bounce. So that 545 level was important. I'm watching this in real time intraday. I'm watching if it's going to reject or if it's going to recapture. If it hit 545 and it broke down 543.2 on the 15-minute chart, Uncle would have looked to buy puts. But instead, it hit 545 and then the next candle, it closed above 545, recapturing it. False breakdown setup. This is me telling the people to make sure they take profits. If you played the 545 breakdown, play it level to level, secure most profits close to the 542 level. This is me telling the group, please secure profits level to level style if you played the 545 breakdown. That was this breakdown. And you guys see why I tell people play it level to level? You played the 545 breakdown, take profits over here. Okay? And look what happened. You see why Uncle say that? So play it safe, level to level style. But anyways, I wrote to the group earlier this week on Monday, 545 served as a strong support and triggered a nice bounce from there. But now it's testing as resistant. If bears can defend, the lower targets would stay in play. If 545 clears, 547 and 548.6 are back in play or higher. Okay. Once we cleared 545 on the 15-minute chart, that was the trigger to go long, and we went all the way up. All the way up. Beautiful. And shout out to earnings. Okay. False breakdown setup. So, I mean, in my opinion, it was a great trading day yesterday. Made lots of money. Hopefully, I'm praying you guys made lots of money. But let's talk about the context and the plan for today. Okay. So we remember, guys, we broke out the down trend line, the multi-month down trend line last Thursday. So we've been in breakout mode, which means SPY has been bullish. Yesterday, we kind of gapped down and tried to push down, went as low as 541.5. Did not quite back tested that breakout, that multi-month trend line as a support, got pretty close to it, but it didn't quite hit it as support before we started getting buying pressure. Overall, guys, we are still bullish, and with the gap up above the 50 daily moving average, that just makes it that much more bullish. That's bullish follow through, okay? So very important we trade this unbiasedly. If the charts are bullish, trade it bullish. If the charts are bears, we trade it bearish. You guys remember when the charts were bearish, Uncle was screaming out bearish, bearish. But once we got that false breakout, once we got that breakout, Uncle's been saying, hey, it's bullish until we break back below. And, you guys see what's been happening, just up days after up days. But as of right now, it's around 561 as of recording this video, okay? I have next resistance at 562 and 564, which is a fib level. If those levels clear, the same way I show you guys on the 15-minute chart, guys, or 30-minute chart, the higher the time frame, the less likely the fake out, okay? 15-minute chart, I wouldn't go no lower than that. But bottom line is, if we clear 562 and the fib level at 564, more upside is possible, okay? There's a good chance we pop up to 567, 568.7, and 570. The 200 daily moving average is around 573, okay? So we do right there, right around there is a gap around that 568.7-ish level. Also a fib level, and above that, 570 and the 200 daily moving average. All right, guys? Got to clear 562 and 564. Now, if we're going to get a pullback, well, you guys see that 50 daily moving average, the DMA. DMA stands for daily moving average. It's just a regular moving average, but it's on the daily time frame. And that moving average is around 558-ish. Okay, so from here, 560 and 558 are support. If we're going to try to play a pullback, you want to see 560 and 568 fail as support. We can go hit yesterday's high was at 556.5, so there's that. And then the close was around 554ish. So those would be support levels I'm watching, and below 554 we could head back down to 550 and 548.6, which is a critical fib level that I was watching as well. QQQ, it back tested that 50 daily moving average as a resistant. It held intraday, but you guys see we're gapping up. I have a fib level support at 483. As long as above it, more upside is possible. 486, 487.7, 491, and 492.5 would be targets. Above 492.5, that would clear a fib level and get above the 200 daily moving average. I recommend us staying bullish above 483. If we do play a pullback, 483, 481, 479 must fail, and of course 477. Getting back below 477 would put 475 in play. And then I have a fib level around 471.5 and then 470. But the 50 daily moving average is around 476.3ish. It could slope down. So getting below 475 would be very helpful for the bears, because it will send us back below the 50, all right? But otherwise, if we're above 483, we could be bouncing up higher. Remember, QQQ is also in breakout mode. NVDA with the gap up, all right? I have the next fib level at 115. All right, we clear 115. That keeps NVDA above the 50 daily moving average. 118, 119.6, 121, and 122.5 would be in play. These are updated levels, okay? If we manage to stay below 115, then 113.5 must fail to put 112, 110.7, 109, and 107 in play, okay? Now below 113.5 and 112 would send NVDA back below the 50 daily moving average. If you are a bear, that's what you want to see. NVDA back below the 50 daily moving average and breaking down those support levels that I'm giving you guys. Here is Tesla. Yeah, that 200 daily moving average pretty much defended. But yesterday, Tesla back tested this multi-month trend line as support, and it held so far. So if there is some bullish follow through today, 284, 286, 288, 290, and 292 all must clear. Above 292, I would be very bullish, because that would send Tesla back above the 200 daily moving average, all right? Today is bearish and 282 and 280 must fail. If those levels fail, 277 and 275 will be in play. Below 275, once again, bears will take back control, putting the 50 back in play, which is all the way down in the 266 area. And below 275 and 273 would send Tesla back below that multi-month trend line. Bears will definitely be back in control. But otherwise, watch for the breakout. Okay, 284, 286 clears. Back to the 200 daily moving average is possible. And above the 200 would be very bullish. Here is coin with the gap up, guys. 207 is the equilibrium level for today, okay? I would not look to short unless 207 can fail to put 205, 203, 200 or lower back in play. But 207 is that sweet number. If it's above, I would stay, in my opinion, I would stay bullish. 210, 211.6 and 213 would be my resistance level. They clear 215, 220 and 222 would be my targets. Okay, and here is the VIX. Want moment for the VIX. Had a nice little bounce, but it couldn't break through that 28 resistance level. But right now, resistance now at 25.7 and then 28. If we're going to get some bullishness going for the VIX, those levels must clear. Otherwise, support's at 23.2. If it fails, we are dropping a lot lower. All right, guys, watch for the breakdown, watch for the support, and then look to react, guys. Thank you so much for being here, Uncle. Appreciate you guys so much. You guys are going to make a lot of money. Keep on focusing on the right things. Where attention goes, energy flows. Peace.